Hello again and welcome back to another video. This video is going to talk about inventory valuation under the first in, first out method. And so ultimately what this says is that normally when you have an inventory, you're normally buying the same, item over and over. And the prices that you buy them at could vary because we all know prices go up and go down. So what happens is we're going to make the assumption that the items that we're selling first are going to be the oldest items. And so therefore, as we are recording the sale and the cost for those items, we take the first set of costs that we recorded for the item and we spend that out first before we move on to the next set. So in your inventory account under the FIFO method, that's what it's called, FIFO, first in, first out. You just think of your account as having layers. The average cost, just put all of those together and kind of just averaged it out. But with FIFO, first in, first out, as well as with LIFO, we look at them as layers. And before we move on to another layer, we have to finish off that layer first. And so that's kind of the premise that we use as we're valuing the inventory. So what we're going to do is we're going to use the same example that we used from the average cost method, and we're going to calculate what our cost of goods sold and ending inventory are for perpetual and periodic on the FIFO method. So hopefully we remember that for each of these units, for the perpetual method, what we're doing is we are calculating this value at the end of every transaction. So similar to the average cost method, we do the same thing. It's just that we treat the calculation of the cost of inventory different. And that's at the time of sale. So let's get started. And let's get started with identifying our costs. In this instance, what I'll do is we start off July 1st. Sorry about that. We're actually starting off July 1st with two sets of layers. Remember, we're keeping track of layers underneath FIFO and LIFO. We're starting off with July 1st, 500 units. And the value of those 500 units, we take $10 valued at units times dollar value, which is $50,000. $5,000 is the value. Okay, and so our second layer is going to be, because this happened on July 1st, our second layer is we purchase another set for $700. It's the same July 1st, 70 units at $12. And so the value of that 70 at $12 is $840. Okay, and so we're just keeping a record of things as they happen. And so for right now, that's all we have. We're just keeping track of everything until it's time for a sale. Most of the challenging work, I guess the most challenging thing, is when a sale happens. So we have a sale that happened on July 5th. And we say that we sold 250 units. And we sold them at $20. Now we don't bring the $20 here because we're not concerned with the sales price, but only concerned with the cost price. And so the question comes up here. I'm selling 250 units, but how much is the cost for those units that I'm selling? Sorry, let's put this as a minus again. And the cost is actually going to be under the first in, first out method. We're going to start with the first cost that we incurred in this account, which is the $10. $10 for 500 units. And so that means that we have to assign $10 to the cost of this 250 units that were sold. It's only going to be $10 because what happens is we have to take into consideration how much was purchased at that price. Because technically, if this was 200 units at $10, I can't say that we sold 250 units at $10 because there were only 200 purchased. So all of that we have to keep it in consideration as we're determining the cost. The cost is only based on the amount that's sold. Once we exceed the amount sold at that layer, then we have to then move on to the next layer, which would be the $70, which would be the 70 units at $12. But we're going to come to that. We're going to have an example of that later. But for right now, this one is straightforward. 250 doesn't exceed the 500. And so, therefore, all of the 250 is valued at the first dollar value, the $10. And so we calculate the value. By saying now that's valued at $25,000, $2,500. And so what we can do here is we can calculate the balance after every sale, because we should actually know the balance. So let's go back here, because I did make a mistake here. I need to show the balance after every transaction underneath perpetual. And so therefore I'm saying here that as of the end of July 1st, we have 570 units available, and 5,840 is the value that we give those 70 units. And so that's the balance before then. And now we need to calculate the balance after, which is going to be the sum here. I'm just summarizing it up. And so we're just summarizing everything. This is the sum here. $3,340 is the so-called balance that we have left. So let's move on. July 6th, we purchased 50 more. And that 50 we purchased for $10.50. So the $10.50, and then the value of what we brought in was $50. 50 times $10.50, $5.25. And let's just take this here and total that up now for the new balance. We now have 370 units, and the total of those unit values is 3,865. Okay, on the 16th we did the same thing. We made a purchase, and so let's put that in there. 16th, we made a purchase of 100 units at $14. The value of those units that were just purchased is $1,400. And so again, let's add everything up. We're going to calculate the sum, which is, here we go, 470. And let's copy that over there, making our balance 5,265 by the 16th. And what I want to do, I'm just going to add another line here, because I see I'm going to need it, because we have one more transaction, which is the 30th. And so July 30th, we sold 375 units. Now, from this 375 units, what's the value that we're going to assign to it? Well, we can go back up to the first one. However, what we have to keep in mind is this is no longer 500 units. Of the 500 units, we used 250. So we have to take that out and realize that there's only 250 of this 500 left. So we can really only record 250 at $10. So what I'd like to do, let me keep a mental track of it over here. 375 units is the total units. I have to deduct 250 of it is going to come from this $10 layer. And so that's calculated as 250 times 10. I'm sorry, this is supposed to be a negative. And so I have 375. I need to figure out what's left. So let's say equals 375 minus 250. I have 125 units left to account for. And so in order to account for that, I have to go on to the next layer. The next layer is $70. 70 units. Sorry, I keep saying dollars. 70 units. And what we're going to find is 70 is less than 125. So that's not going to complete the layer for the sale. But this is what we have to record. We have to record the full 70. So 70 at the $12 gives us another cost to add to it. I'm out of space again. Let me add two more. Let's see if two more will be okay. We got 70 and 250. The total of 70 and 250 is 320. And remember, we're going towards 375. So let's put that in here. 375 minus 250 minus, we got another 70. So we have 55 more to claim. And so let's move on to the next purchase. The next purchase is $50. Because if you follow it, purchase is 70. We started with the 500 original. Purchase is 70. The next purchase is only $50. 50 units. So we have to take 50 units at the price that we purchased at $10.50. And so $10.50 is what we use to calculate the next layer that we took from. And then that's not enough, because we should note that we are short 5 whole units. So we have to go to the next layer. So this layer is completely done. This layer is completely done. We have this layer of 100. That's at $14. So what happens now is the remaining 5 we take from that layer. So 5 at $14. And it actually calculated it for me. How nice. 70. So if we highlight everything but adds it up, you'll see that this is now the 375 that we needed. If we total all these, it's 375 for the sale on July 30th, all at varying prices because it's based on the layers. We sold 250, the remaining 250 from this 500 balance. Then we sold the full amount of the 70. Then we would have sold the full amount of the 50 and 5 out of the 100. And if we need to keep in mind, if we take 5 from 100, we get 95. So 95, that means that 95 is left over from this particular layer. And that represents our ending balance. Whew, it's a lot of stuff. But let's calculate our balance and see. Let's sum everything up. 95, perfect. And then let's sum this up here, and the sum of this is $1,330 is our due balance, and this is actually going to be the ending inventory balance underneath the perpetual system. So our ending inventory 1330, 1330 is our ending balance. And our cost of goods sold, similar to the average cost method, is we actually just have to add up everything that we calculated for each sale. So the only sale is this, and all of these here need to be added up to get me $6,435. So to get my cost of goods sold, I had to add up all of these and this, and that would have given me the cost related to the first in first out method. Okay, and yeah, that's All there is to it, I know it's a lot, for the first in, first out method, perpetual. Perpetual meaning we calculate after every transaction. And so after every transaction, we recalculated this balance until we were done with all of the transactions and able to calculate our ending balance and our ending inventory. Most complicated part about this is keeping track of the sales, because we remember that the quantity or the value of our sales is based on the first layer that we would have had in our inventory. At the beginning of the month, it always starts at the beginning balance and then it moves forward. And so this is the first layer that we had, the $10, and we sold $250 out of that in the first sale, the first set of sale. And of course, in the second sale, which was a lot more, we had to take from all of the other layers. But we always started at the top and we moved down, and we didn't move to another cost layer until we completely wiped out the first one. So we wiped out July 1st layer, the beginning balance layer, when we took 250 of that and we sold that. And then we moved on to sell the 70 as well. And we moved on to sell from the 50 layer as well and from the 100 layer. But because we only needed 375 units to be sold, that meant that only 5 units of this layer were used. And so what we do is we just take that information and we just bring that down and we calculate everything, and yeah, we came back to our ending inventory, which we calculated the whole time along the way. And then once we had that, our cost of goods sold is going to be the total of all of the costs that we calculated, and that's always the case underneath the perpetual system.